Good morning. All right, it's more of the same. I'm done. All yours, Dan. I'm kidding, but it is more of the same. Should be over today. Let's hope. Let's look at the charts. Good morning. Good morning. Oh, been in a holding pattern. Amazing for it to be this long. Not even any kind of a substantial pullback after that run, but look, we went over the internals. The internals have neutralized somewhat since the run up. Repeating, but we covered, this internal here as to why. Not I believe that historically it's what happens when this breadth internal explodes like that from the low end to the top end. The markets continue higher. It doesn't mean there aren't corrections along the way. And I did explain at the time that most of the times when that happens, it's after prices have corrected for a while, meaning we can get back to here is in a situation like this where you've had a larger correction and then it explodes off the low. So there was let's just call it a minor 5% correction, and then that advance. And, we always have to keep in mind that markets can change. And what comes to mind is that a couple of years ago, was probably after COVID, I forget, but one of the intermarket and analysis and market internals that we cover in the advisory letter is to review various yield curves. And they don't give us signals that often. They improved last week, but you know, going back, I think it was a couple of years, they signaled a recession was ahead. And lo and behold, well, you might remember all of the talk about soft landing and there's been no recession, but there were 2 quarters of back to back of negative GDP at the time. That was always the measure of a recession for the government. And then they backed away from that. It's different this time, but theirs has been a recession. And I quote Kathy Woods of ARK Funds. She called it a rolling recession. And that rung true to me because she said something that I believed, but there wasn't the typical evidence of it other than those two negative GDP numbers. And so, look, I've mentioned it before, retailing doing poorly, grocery stores doing poorly, so many things, and the consumer hurting. And now you heard JP Morgan yesterday um, mention that the consumer is kind of, I don't know the exact words that they used, but was basically to admit, hey, the consumer's not in as great shape as most believe. But so they're just stating the obvious. Maybe somebody decided to tell the truth versus the BS that typically comes out of politicians' mouths. So markets have accelerated. They're at resistance. We're all waiting for the number, and we're all waiting to hear what Powell's going to say. Over the last week, a little more than a week, we've just had this sideways movement, chopping back and forth, back and forth. So we've got lines in the sand down below and, of course, up above. That the consumer is becoming more discerning and the environment is more fragile. Those are the exact words. I'll thank you, Alex. I'll post that in the social media, the exact terminology that he used. And so, the little cracks in the armor, and maybe because they told the truth, they got punished yesterday. Stock plummeted, where they said they were going to take a charge of about, was it 5 billion? 500 million? I forget, whatever. Anyway, it was a big number, and the stock cratered. We'll see how much it's going to recover or not. Let's see what it's doing this morning. It's just hanging down there. So Nothing going on. All right, so let's look around. We can look at the futures here. This is going sideways nicely at resistance. So just paying attention to the technicals, this is bullish price action, right? Yesterday, I mentioned the concept of absorbing supply. That's a picture of it. It gets rejected. It doesn't go down. All the candle bodies are about the same. So on a closing basis, it's not moving. It's going sideways there. What I'd love to see, as from a long perspective, is, and maybe we get that today, it dips down and it rips right back up again. It's what I call a correction bar, what communicates that there are buyers lurking below. And it's like, who gives a darn what the news is? We believe it's going up, sitting down there, wherever that might be, 2,500 for futures. But if we look at IWM, I don't know what's down there. Right. We look at the charts, minor support. Let's just call that major support. It's not marked as a pivot. Nonetheless, if it spikes down there and you get a bottoming tail bar, think long. Qs 620. There's support. If it dips down there, look for buyers to show up. We'll see what happens. Spiders, same consolidation. Topping tail red day. Yesterday was an inside day. I know, yeah, I know yields are going up, but the markets are holding up here. So I'll repeat some of my commentary from during the week is that, yeah, we look at interest rates, and on a short-term basis, we look at that. And here's the 10-year breaking out. It's pushing up above the highs. And, the market loved it when it was going down. Now it went up. It really doesn't care. And you can see this head and shoulders bottom. And now it's taking out the highs, which says it's going to go up. So interest rates going up. The negative is there's a belief about inflation, or there's a belief that the economy is going to be doing better. Maybe all of these trillions and trillions of dollars that are going to be invested into America that the president is going to talk about is going to produce jobs. Paychecks, if you look at paychecks, it's starting to bottom out. It hasn't really moved up in any meaningful way yet, but that's staffing, which has gotten destroyed, along with restaurants and grocery stores, all crushed. So we see this move up in interest rates and say, okay, that's competition. Do I put my money in a 10-year treasury or a 5-year treasury, or do I put it into stocks? Well, what people typically look for rather than stocks is really not that. What they look for is when this, right, the interest is going up or at high. You go back to like 1980, you could get 20% in a 3-month CD. It was amazing, right? 20%, 18%. And people were just rolling over. Who gives a shit about the stock market? He can get 18, 20% in a 3 month, no risk. So, but this is going down. It's down quite a bit. So those that have been putting their money into these short-term instruments to collect that, they're going to cut. Well, this is already saying they're going to cut. That's in the cards already. What they're going to do next year, that'll be debated for months and months, right? We'll see what Powell says. That's what we're going to see today. But as this continues to go down, that favors stocks, because people say, I can't get a decent return here. Let me go take the risk and put it into stocks. And there's plenty of beaten down stuff, lots of beaten down stuff. That's what we've been finding, in the room. There was a lot of beaten down stuff, and the mags and what have you, some are doing better than others, but so again, there's lots of moving parts. Bitcoin just still hanging here. Not so sure what that's going to be doing. I don't know. I need to see something more convincing. However, we had Ethereum. That looks more convincing. It's still in a downtrend, but at least it's a wide range bar there. So something be starting to happen there to, continue to watch how that unfolds today. Crude oil still doing a lot of nothing. Just been chopping around. So no matter where we look, there's a lot of back and forth, back and forth. We already looked over here. Gold is still hanging out, still looks okay. It's, got that little bottoming tail bar, but overall, if I'm putting the cursor on the closing prices, it's just marking time like everything else. Everybody's just waiting to see what Powell's going to say today. We know they're going to cut. That's a given. We all know that. So everybody's waiting on the sidelines. Silver moved up nicely, looks great. Breaking out, bullish consolidation, looks fantastic. And everything else is pretty much the same. You see, it's marking time, but topping tail after a move up like that, big deal. On a closing basis, it's just going sideways. If you look at equal weighted, that had a big move. So this is another measure of this breadth internal, where equal weighted Qs made a very meaningful advance. And you look at equal weighted S&P, giant move, intraday made a new all-time high and got rejected. So overall, it's just a giant mess with big bars overlapping each other, whipping back and forth. So basically, it's like put on your seatbelt and let's see what happens in the next day or weeks or so. And I always refer to the blog posts. There's a lot of great information there to go read those blog posts, and go look up the one loose versus tight. You have to scroll back to a few, but it's really great information and applies to what's been going on lately, because this is loose. This is a picture of uncertainty. And it's like, I think it's going up. Oh, I think it's going down. No, it's going up. No, it's going down. Oh, it's going up. So it's got to tighten up. And it's starting. This is the beginnings of tighten up. And as we get through today, we'll see if it goes loose again or whatever it's going to do. Yeah, yes, Lloyd. So if you go to the website and you look at the navigation menu up there, it says start here. And if you scroll down, it says blog posts, and a little thing points out to the right with Dan and my name. And so you go and read those, and there's lots of great articles there that you could really benefit from. Not just the loose and tight, there's a lot of good stuff, and it's free. Anyway, that's it from me. Hand it over to Dan. I got 2 presentations today. I'm doing one with Dan, MT Live at 12, and then at 1 o'clock, I'll be doing one through Cyber Expo. I go on at 1 o'clock, so MT Live may be cut by a couple of minutes so I can log in there and start talking there. But I'll post the link and hopefully you'll join us. Good morning. Even if you don't, get the recording.
By signing up, sure. That day, it's been boring all week here. Chop chop. The chop chop can support no move higher. Everyone knows. Everyone knows we're getting no cut. So it's going to be the comments, like always. So my alarm on USR, I did a little video last night, threw it in the Telegram about a bunch of bottoming patterns we've been trading and watching, and this was one of them on the list, and my alarm just went off. So it's gapping over this. Let's buy half lot, 10-minute high, half lot, 30-minute high. This nice bottoming pattern, and today MT Live, look, breakouts. Look, and we nailed this sector. We nailed the minerals sector. We nailed the quantum computing stocks. There's a couple sectors that just exploded, and now a bunch of them are making these huge retracements. I mean, that's greater than 100%, but that's a void. Fluid moved down daily, weekly, leaves a void. Well, you can have speed bumps on a smaller time frame, but this has been going sideways at resistance, so it looks great. MA, we're short. They're doing a repurchase of stock, so I guess that's what's making a gap up. We'll just sit through it for a little bit because it still looks lower. That's a nice 1, 2, 3 with a void to the downside. Look at the moving averages. Visual aid helped that analysis. Circle, another bottoming pattern. Looks great. Over yesterday's high. Looks great. And, all patterns come in different flavors. You might say, well, why are you calling that a bottoming pattern if it's, rallied from $70? Well, it bounced and went sideways, and it finally got above the 20, and I got a void. So it's still a bottoming pattern. Charter, another bottoming pattern on our list. So it will start off as a put spread over these highs, but I'm watching it as a directional also, but surely not doing a directional ahead of the Fed. I posted this little disclaimer in Telegram. Let me give it to you all anyway. That's this. We had the discussion, should you be trading? Well, day trading, sure. Swing trading and open positions. It's up to you. There's no right answer. I'm definitely more selective, and I've been tightening stocks. Let's go to earnings here. GME 2185. It's a gap in the middle of no man's land. Like a no bias. Kerbal, this Cracker Barrel, man, that board should be fired for just destruction of shareholder wealth. I know they had that PR abomination with getting rid of their logo with the old man in the rocking chair, but that looks like they got bigger problems too. I know pattern. I mean, it's in a nasty downtrend, gapping lower, just down so much, but it's still in a downtrend. Looks horrible. Breeze 36. So this could be a gap and crap. 30-minute low fall spread. Play. That's a bull rectangle, but you don't have a void. Look over here, you got a wall of resistance is the problem. If it was a momentum move down and it looked like this, then we'd buy a breakout. Because it still could be a day trade, maybe it's bullish. I'll keep it there. Scaramucci. Well, number one, I don't care about what Scaramucci says. I actually place more emphasis, Alex, on the poly market. What do they say? I think it's smarter than Scaramucci. But my guess is they're going to mix it too. I said that all along. I'm like, shouldn't Congress have a say in this? That was my initial response to him going hog wild on tariffs. I'm not sure what you mean about a liquidity surge, because the tariffs or if he has to give money back, that's gonna increase our deficit, right? So that's gonna, same old, you know, deficit problem. I don't know what, I don't follow the liquidity surge part. AVAB 267, there's a short idea in a call spread. Had it gapped to yesterday's high, it would be an inverse head and shoulder, 30-minute high trade. But we're traders now. This is what we say, that we're professional poker players. We look at the gaps in the morning every day. We look at the patterns, and we have the skill set to look for opportunity. This is gap in this 267 bearish gap. So I'm going to put playing my hand is call spread and 30-minute low short if it sets up that way. KC is like a big old 7-Eleven gas station. 550. There you go. Call spread. I've looked at him traditionally though, and he's extremely spready, but that's my bias. My bias is 10-minute low call spread. So if somebody wants to help me with that and AVAL, Mind 871, bearish gap, but right to these prior lows. Sell setup weekly, support here. So my initial bias would be 30-minute high put spread, but I don't see anything interesting here so far. Wow, that's a crazy morning turnaround on Chewy. Wow, that is a monster range. 3250 to 37. That's a monster morning range. But gap's too big. That's too volatile. This one, I almost bought calls on it because that's a beautiful little buy setup. 1, 2, 3, 4. Target 15 to 1550. It's actually gapping down, so it's probably not going to trigger. But let me set an alarm. It's at 1390. If it recovers, then I still like it. If the alarm doesn't go off, then I'll forget about it. Yeah, Greg showed Ether Thomas. I like it. I like it. I like daily, weekly, monthly. Let's see how it closes after foul day. But I like it. And finally, 1966. That's the bullish gap. It's the start of it's a sloppy bottoming pattern. Okay, so all right, so that means 75% again. So Polymarket is 5% higher than Scaramucci. But yeah, they're in the same ballpark. And that's my take too. And not only some common sense, but what I know of the law. And then thirdly, I think I saw, they gave you little snippets of the questions from the justices during oral argument. And then, that's a little kind of heads up to what they're thinking. All right, that's it on earnings. This is miscellaneous stuff. LKQ closing breakdown. Let's see if we can get a 1, 2, 3. Healy bottoming pattern. Let's see. I should have an alarm at 21. Hey Sam, do you know where Helen? Do you know where Helen is from? This stuff, where they're based out of?
I forgot to show
Oh.
you the SPX. but there's always something interesting happening. Usually the strikes move in the same direction, either up and down, or they either both move down or both move up based on how the market moved. They moved in opposite directions today. They spread apart. So people are anticipating volatility, you know, yeah, of course. But just thought I'd mention that the strikes moved away from each other.
Yeah. I was waiting for you to finish, and when you said that's unusual, I was gonna. You already answered it, but that was going to be my response, which is not today. It's not unusual.
Yeah.
That's exactly what it means. They're the bell curve is spreading out, which, as you just said, one word is volatility. So volatility is rising, which spreads those numbers out. Exactly. All right. So Mrs. Troy. Oh, okay, cool. U.S. food was on our list yesterday. Ideally, we get 2 inside bars, and then we buy it, Friday over the highs. Circle bottoming pattern I like over yesterday. These are a couple of little gold stocks my back to one guy gave me, and he said, he's trading them, they're penny stocks. He gave me a big list. I kept a couple of them here, and now like that one. Um, so look at this monthly, 40-cent stock. Looks like it could double, go to 80. Um, this one he gave me, USAS. I like the daily for a swing trade, but the monthly is a climb up. But look at this beautiful breakout right here after this bottoming tail on the monthly. That's where you say it's a core long. I'd still enter based on the daily, weekly, but this big old rounding bottom is saying that you got a big target. Why? We've had that talk before, Alex, and I totally disagree. Chart to chart. It's like going into the buffet. I'm teaching you about to cook all these types of foods just because you don't like sushi doesn't mean I'm not going to teach how to cook sushi. You don't have to cook it or eat it. All right, so Amazon and Microsoft in the news about this is why the NAS is weaker than the other horsemen today. I think. Well, diamonds are weak too, but Microsoft is the ugliest fang here. I guess they're dumping a ton of money into some centers over in India. Moss potential bottoming pattern, but zero indication yet. But I'm just going to start watching it because look, near this prior low. So even if it takes a month to set up, I'm going to start watching PDD, P Diddy, bearish gap, call spread idea, but I think that's Chinese race. I just saw going by the ticker. That's a nasty breakdown, daily, weekly, monthly. Look at that. That's a topping pattern. Look at that. This thing exploded from 227, double topping pattern. Now it's broken down. So that race, and maybe this is another Greg, another recession thing. How many people can buy Ferraris? We know the rich people do, but if they're losing their vice president job at Bank of America, maybe they're not going to be buying a Ferrari this year. And JP Morgan bearish 15-minute chart still looks lower, maybe for a day trade. I think GE Vernova, I don't know what the news was. It's not earning, something to do about splitting up things. I don't know. Pump got an upgrade. It's bullish, but no pattern. SMCI, another bottoming pattern. I have an alarm at 35.40. But yeah, we're starting off weak here, so I got no desire for swing loans, that's for sure, unless it's really delicious. And I'll tell you if it's delicious enough when I see it. Ether. Ether looks good. All right, Hims alarm. All right, we had a put spread. I tightened the stop. So that's stopping out at a profit. IONQ low alarm. I forget if we're in this. IONQ, yeah, we are. Stopped at 52.48. All right, so this one's stopping out at a nice gain. We sold partial at $55, so we got a nice gain. So you see, I've been tightening stops because see the daily is still pretty fine, right? But I yesterday I just started tightening things. I call it battening down the hatches in the sailboat. When you know that a storm's coming, you're just preparing for higher volatility. And the higher volatility is this Fed announcement. That we have a nice gain, so we'll take it. And I'm going to set a new alarm, 54.50, because I still like the day. Well, nah, I'll set an alarm, but no, there's better than this. 54.50. Haley. Haley looks fantastic. I think my alarm was at 21.10. But yeah, that's a beautiful bottoming pattern. Today's subject, today's subject breakout, it's more breakouts and uptrends and sideways trends. This is a breakout from a bottoming pattern. But yeah, I like it. Sloppy. I'm not crazy about it. TJX. Yep, yep. That was too bullish. That's on its own page, Patrick. That's that's an igniting gap on the 15-minute chart, relative strength, bullish daily, bullish weekly, bullish. It's on its own page. That is the definition of own page right there. But I'm personally not doing it just with the market falling apart here. I just, but that's just me, you know. D-Dog, low alarm. This thing's, we're shorted. It's kind of in dead money. Let's see, our cost basis is 153.25. You know what? I'm not tightening that just because of the Fed now.